So, a lot of founders have said to me, Shuo, you keep on saying that you can't predict the future, you don't have a crystal ball, but if you had to predict the future, what does next steps look like? What are some things that we can anticipate that will happen? So, as promised to a lot of founders and due to popular request, I will try my best to make some predictions of what might be coming. So I'll just share one prediction, perhaps on a regular basis with you, to help you hopefully peek ahead a little bit to what's coming based off of course, what I'm seeing. So for those of you who don't know me, hi everyone, my name is Shuo Chen. I am a former founder, now investing in founders and teaching founders at Berkeley and Stanford. And I'm also a board member here at Decode, the largest founder community co-hosted across Berkeley and Stanford. And I'm excited to share with you a little bit more around a prediction for the future. Let's try to look ahead into the future together and see what might be coming. So my one prediction for this week is that venture investing will go even earlier. So we'll see from even a couple years ago that, at the earliest, there was the traditional angel round and then seed round and then Series A. That was kind of the stretch. Fast forward a couple years later, we had the angel round, we had pre-seed round, we had the seed round, and then Series A onwards. Fast forward to now, you have funds trying to go even earlier to scout out, different opportunities. And so I suspect that this will continue to grow because if you look at valuation benchmarks, the expectation for how much is already built by the pre-seed stage right now matches what the requirement was for Series A many years ago. And so now with founders also increasingly building in public, which just means that as they're building, they're sharing their launches, sharing what happens on the back end on LinkedIn, you'll definitely have investors that continue to just reach out to founders as they see this happening in the public social media. So investors will try to generate more alpha, which just means the potential future upside. Investors will try to do that by finding founders who are so early, they've not yet even started to share how they're building publicly. So obviously for me, I am biased because we've been focused on investing in fractional founders, or what we call fractional founders, for a very long time. These are entrepreneurs who are so early that they're still building part-time and haven't even quit their full-time jobs yet to build. So these are folks who are in full-time roles now, whether they're a full-time employee or a full-time student, and they just come across a really big painful point, personal pain point that they've been trying to solve. And they've been building a solution part-time and testing to see what kind of traction they get. And if it does well and it proves these hypotheses to be true, like my hypothesis for the future is that this is a real problem and there will be more and more people who need a solution. If this proves out to be true, then we see these fractional founders eventually going full-time. So this fractional phase is definitely a limited period of time while they're still part-time. So I suspect that going forward, we'll have the fractional phase before these founders even go out to raise their first angel round with family and friends and whatnot. And then we'll have the pre-seed, seed, Series A onwards going forward. So if you're curious about other trends happening in venture, I'll hyperlink some of our thoughts down below so you can check out other predictions. But with that, hopefully this gives you some food for thought. And we'll see you at the next week's session. Take care. Bye.